Hello and welcome to the Mind and Money podcast. I am Sherry, a financial coach, and I am here today to talk all about taxes with my first solo episode, Sans Val. So if you are stressed about your taxes and you're not sure what to do, and you're Canadian, you have found the right place. So let's dive in. The first question that is super important is, when do I need to file my taxes by? So there's two different dates, and the filing deadline for most individuals is April 30th. But if you are self-employed, you and your spouse are able to wait until June 15th to file as your deadline. But the one caveat is, if you owe taxes, if you are self-employed, you actually are required to remit them by April 30th. So it's kind of a catch-22, because how do you know what you owe and pay them if you don't actually complete and file your taxes? So just some good dates to know to mark your calendar for. Okay, let's start out with something that I will talk about to anybody who will listen, and that is the answer to the question, should I file my taxes on my own? And if so, how? And the biggest resistance here is that you're afraid of fucking it up. You're afraid to go to CRA jail, but you're not going to go to CRA jail, and you're probably not going to fuck it up. Of course you could, but let's walk through the if you should do your taxes on your own. If you are an employee, or even if you have a pretty simple business, filing your taxes on your own in Canada is actually not that challenging. There are a couple of programs that walk you through each step and really hold your hand and even review things and make suggestions for things you may have missed. Those programs are Wealth Simple and TurboTax, and there's also UFile. I personally have used Wealth Simple Tax with great results. And while they do ask that you make a donation, it's not required. So you can actually use Wealth Simple Tax for free. And I believe you can use TurboTax for free as well. But I do believe if you have some work from home deductions that you want to be able to claim, you have to upgrade so you're not able to just use the basic plan. So just keep that in mind. Not sponsored at all, but maybe something I should explore. These programs help walk you through each step. Generally, they start out with some questions and you're ticking boxes for things that apply to you. So they're going to ask you questions like, are you an employee? Do you have a T4? Are you self-employed? And they're going to be able to highlight exactly what you need to do. Now, if you have a CRA My account, this gets even easier. And side note, if you don't have a CRA My account, I highly recommend you go and sign up for one, because it makes so many more things easy. You can see if you're eligible for any payments, when they're going to be due, updated information on your tax filing status. So having a CRA My account is helpful for a lot of reasons, but it's especially helpful when filing your taxes, because through these online tax programs, you're able to connect to your CRA My account, and they actually pull all of the information from your CRA My account. So this is helpful because it eliminates some manual entry mistakes when you're putting your T4 or RRSP slip information in, or any other tax slips. It also pulls any information like carry forward amounts. So if you previously had a tuition amount that you didn't use all of, it sees that and it pulls it into your taxes. The same with your RRSP deduction limit. So make your life a whole lot easier. If you're going to attempt doing your taxes on your own, sign up for a CRA My account and allow that to do a lot of the heavy lifting for you. Because if you're an employee and you have a T4 slip, maybe a few medical expenses, maybe a few RRSP deductions, it's going to take you 5 to 10 minutes to fill out and complete your taxes. I am not even joking. I've had people reach out to me and say exactly this. If you have a simple tax situation, save your dollars, do your taxes on your own, because there's no magic formula when you're an employee to save yourself a boatload of taxes. It's all simple data entry. And like I said, the CRA pulling that information in does a lot of the data entry for you. If you're not sure, you can even try a couple tax programs and see if they give you the same information or make any different recommendations. So try it. experiment. And then at the end of the day, if you're still not confident, you can reach out to a tax expert. So if you need help with this, feel free to shoot me a DM because I'd love to help you with your taxes. Because in addition to being a financial coach, I also moonlight and have some training on preparing your taxes. One of the big questions that I have heard from a lot of people through social media is about the work from home deduction. So the first question is, am I eligible? And if you work from home more than 50% of the time, you are able to claim this work from home deduction. Now, disclaimer, you do need your employer to fill out a form. It's called the T2200. Basically, it's just indicating that you are working from home and if you have any other additional expenses that you can deduct. I hear a lot of people say that as an employee, your employer requests you fill out the form and just get them to sign it. And technically, they're supposed to fill it out, but it's okay if you fill it out as long as they're reviewing it and signing it. So when you're doing this deduction, it's all based on the area of your home. I've heard a lot of people say that they went through all of the work to put this on their taxes, collect all the information, and they got $4 back in their taxes more than before they filled it out. So if you have a small space in comparison to your whole home, and the space you use to work is also used for personal. So if you work at a little corner of the dining room and at the end of the day, you pack your stuff away and it becomes your actual dining room, this could mean that it's not adding a whole lot of benefit because they have to consider the amount you're using based on the total square footage of your home, but also the time. But on the flip side, if you have a dedicated space you use for your office, you use another bedroom or a special space that is only your home office, and it's a larger portion of your overall home, you're going to see a better tax benefit from doing this. So it doesn't hurt to put all the information in, even if you only get $4 back. At least it's a learning experience, so you know maybe not to do that next time. You're able to deduct a portion of many of your home expenses. So if your home office is 10% of your overall home, you are able to deduct 10% of your heat, 10% of your hydro, 10% of different things depending on what type of employee you are. If you are a commission-based employee, then there's more things you can deduct. So I encourage you to look into this. If you're having someone do your taxes, be sure to ask this question if they aren't asking you about it, because it's important to know that everything is getting taken care of. Because if you go to those tax preparers that are in those tax pop-up shops, they might not be asking the right questions because in a lot of cases, they unfortunately don't have a whole lot of training. So know if you apply and you have all the information, it will help your taxes. How much it helps your taxes by decreasing the amount owing or increasing your refund will depend on your space, your household bills, and if you have a dedicated space for your office or it does double duty for you on a personal basis. Next up, let's talk about medical expenses. What expenses qualify, and does it even make sense to add them? So if you Google CRA medical expenses, and you might want to throw in there like income tax deductions, you are going to come up with a huge list of all of the qualifying expenses, and it does vary a little bit depending on your province of residence. So have a look at this and see if it makes sense for you to claim them. If you are an employee that has health benefits, you are not able to claim the portion that the employer's benefits paid for. So if you go and you get a massage and your employer's benefits cover 90% of that, you are only able to claim $10. So if you have benefits, it may not make the most sense again to claim them. But you can also, in most cases, deduct any premium that you're paying towards your employer benefit. So you can't deduct the portion that the employer is paying. But if you're paying out of pocket and you have deductions coming off your taxes, that should automatically go into your medical expenses when you enter your T4. Now, does it make sense to add them? Many people tell me that they added them all in, they did all the work to add them, and they didn't see any change in their taxes. And this is because there is a minimum amount, and if you have less than that minimum amount, it doesn't do anything to your taxes to add these medical expenses. If you don't have more than $2,635 in deductions or 3% of your net income, depending on whichever one is lower. So if you have a lower net income, it might be less than the $2,635. Those are the amounts that you need to have over to see a difference in your taxes. So do a quick addition, look through your things, and see if it's going to make sense for you to go to all of the work of putting together your medical expenses. And if it does make sense for you to claim them, maybe think about stashing those medical receipts in an email folder or in an actual folder for next year, so you don't have to go rummaging through stacks and stacks of paperwork or trying to find shit in your email, which tends to never work for me. Next up, do you need to file common law if you are living with a partner? So if you live with a partner and you are not married, the requirement is if you are living together for 12 months or more, or have a child together, then you do need to claim common law. That will mean that you may not be able to claim as many deductions if you were a single parent previously, because that does make a big difference in your taxes. So if you are married, or if you have a common law partner, someone you've lived with for more than 12 months or have a child with, you need to be ticking that box for common law or married to make sure that things are getting calculated correctly. What if you don't file your taxes or you're behind on filing? So I talk to people a lot that have a few years of catch up to do, or they're considering not filing their taxes. And if that happens, know that first, by not filing, you are missing out on any federal or provincial benefits that you're entitled to. This does include child tax benefits. So to be eligible for these, you have to have your taxes filed. And payments that start in July of 2024 are actually requiring your taxes for 2023 to be filed. So if you do not file your taxes until past that July deadline, then you will be missing out on those payments. Now, you won't lose them. You will get them paid retroactively when you file your taxes, but you just won't get them when everybody else does. So know that being able to get these payments is dependent on filing your taxes. And if you're behind on filing, depending on your income, here's a little bit of motivation. If you file and you've got 2, 3, 4 years, whatever that is, to catch up on, if you are entitled to any of these provincial or federal benefits, when you file, you will get those payments retroactively. So may not be as fun if you are self-employed or know you're going to owe taxes, but just a little motivation if you are an employee and you've got some deductions to claim and you're lower income, so you might be entitled to more of those benefits. Also, if you don't file your taxes and you owe, there is a late filing penalty, and that is 5% if you file late. Right off the hop, you're being charged 5% of any amount owing, and then an additional 1% for each additional month that you're late in filing. Or if you're a reoffender and you filed late before, and if the CRA charged you with late filing penalties in 2020, 2021, or 2022, that's going to mean that you're actually going to pay double. So that means a 10% late filing penalty and then 2% each month. So if you were late filing last year, know that this could come and bite you. So we don't want that. And here's the thing. If you owe taxes, you will avoid this late filing penalty if you file your taxes on time, even if you don't remit the amount owing. Okay, so it's important to avoid this late penalty and file on time because you don't want to be assessed that penalty right away. And for those on the other side who anticipate a return, you can actually file late and there's no penalty because the government owes you money. So don't file late because you want to get your money from the government. Don't give them a loan for any longer than you have to. So if you anticipate a return, go get those taxes filed. And side note, it's a good idea to have a plan for what you're going to do with that refund. So when you file, you'll know how much of a refund you're going to get, so you can start planning for that as soon as you know. But if you owe the CRA outstanding tax debt or GST, HST, if you are a business owner, know that there is a 10% interest on any amounts owing. So This has increased in 2024. I think it was 9% last year. So know that you're paying 10% interest on any outstanding amounts to the CRA. Well, there's lots of nuances to your taxes and all of the things that you need to know. It's important to do what you can to understand. I know if you're listening, you don't love taxes and finances and all of those things as much as I do, because I like to nerd out on it because I love them. So if you feel overwhelmed by your taxes, if you've got a couple years behind, know that there's no shame in that. It's completely okay. Just take some baby steps forward and go open up that Simple Tax and log into your CRA My account and see how many years you have to file, and then just baby steps every time. Set a timer for 10 minutes or 20 minutes or half an hour to start to put your information together, or make that first call or send that first message to connect with somebody who can help you. Because if you feel overwhelmed, a lot of time it's two things: collecting the paperwork, but also the overwhelm of actually doing the task. And if that's the case, outsource that task. Have somebody else do it for you. Have somebody else take control of your taxes and make sure they're asking you for all the tax documents that they need based on your situation. So I am going to end here because I could talk about all of the different things for taxes until I'm blue in the face, and I would love every minute of it. But I don't want to take hours and hours of your time because I know your time is precious. So again, if you do need help with your taxes and you are Canadian, feel free to shoot me a message. I will drop my email in the show notes so that you can reach out, or you can also DM me on any of my socials to ask for some help. I am able to help individuals as well as obviously families and self-employed individuals as long as they're not incorporated. So feel free to reach out and roll up those sleeves and get to work and get your taxes caught up or get your taxes ready to file for last year, because imagine how relieved you are going to feel when they are done. This has been the Mind and Money Podcast. I'm Sherry, a financial coach, and I hope that you've enjoyed this episode. So be sure to subscribe so you get to see all of the newest drops of our most recent episodes. Have a great day and happy tax filing.